All right, everyone, welcome to the start of the new week, and let's go ahead and talk about the Bitcoin price action a little bit more seriously today. I don't know if anybody could notice, but yesterday's video was a bit of a psyop. I am fishing out there to see if retail is in the market and what their thoughts are. That's why I was trying to get people to comment down below, and I gotta say, based on the feedback I got in yesterday's video, I'm not really too concerned. I'm not sure if it's the fact that I just have a lot of based subscribers because you guys are awesome and you know what you're doing in the market, if retail is just not here yet, or if Bitcoin is truly going to run for much longer than I'm thinking and have this big blow off top. But most people did have the same consensus as me in being more conservative in the markets, not wanting to wait until multiple six-figure price targets to get out. And that is where my head is at. I do not think this cycle is going to last for very long. I think we're in the final stages of the cycle where money gets rotated into risk on assets. You have a big boom in the altcoin market, the meme coin market, but it doesn't last very long and Bitcoin doesn't go much higher than we are right now. Now, am I saying we should be looking to get out in 2024? Not necessarily. No, I think the cycle could easily run for at least maybe 4, 5, 6 more months into late spring of 2025. Of course, we cannot predict anything. We just have to react to the charts. So far, so good. I'm not seeing any signs to go ahead and start selling anything quite yet, but I am seeing some warning signs that signal, hey, the cycle is going to be over a bit sooner than the majority believe. Some stuff like XRP running that we've talked about. Now you could say that's a bit different because we actually have regulatory clarity now. In previous cycles, it wasn't listed on many exchanges, so it was a bit harder to go. It may have reacted more alongside with meme coins because of that. So I think we'll just stay focused on meme coins. I think that's going to be the biggest top indicator, as well as maybe Coinbase #1 on the App Store. Another reason I think the top's coming in sooner than many expect is because of those recessionary indicators that have been warning. Like, hey guys, look at the yield curve over here. We have now flipped above the zero line. Historically, this has signaled a recession is imminent. Now we have flattened off here. Usually the recession doesn't happen until we start to amplify and start to go parabolic upwards into the positive on the yield curve, such as September of 2007. You can see right there. Once we start leaving the zero line into the positive, the recession does take place. You look at the 2000.com bubble, very similar thing. We break through and there's no backtest here. We immediately enter a recession. I think at this time we're seeing it cool off. We could see a backtest of the zero line. We could still be, like I said, 4, 5, 6 months out from really needing to worry about this. But the fact of the matter is this inverted yield curve is in recessionary territory. And if we see this violently start to go to the upside, we need to be very, very vigilant in the market and start thinking about a top potentially coming in, confluencing this with other topping signals, right? This isn't just one thing you can use on its own. We only have a couple of data points to go off of, right? It's really only 3 data points. You can even see it kind of worked out when we had COVID. You see this go dip under the zero line for a split second, and then we start to rally here, and that's where you have a black swan event. So historically, this has been spot on, but it's very hard to time the top. I don't think just getting above the zero line like we are right now is anything too bad to worry about, at least immediately. We also see unemployment rate isn't doing anything too scary as well, just kind of flat, right? But if we see this start to go up as well, that would be another warning sign. So those are the 2 things I'm watching very, very closely when it comes to macroeconomic indicators, right? Inverted yield curve, unemployment rate, the 2 biggest things that are leading recessionary indicators. Whereas when it comes to Bitcoin, we got just general market sentiment, which is why I'm doing those tests with the video like I put out yesterday, just giving a very retail outlook on the markets and seeing if people agreed with it or not, as well as the news headlines, Coinbase ranking on the App Store, and meme coins are going to be the #1 thing in my opinion. I'm waiting for those memes to run, mainly because those are my biggest holdings. So I'm not trying to sell until the very last second. We could see those run, like I've been saying, on a lower high for Bitcoin. So the top could already be in, but then the meme coins run after that top has come in, and that signal say we're probably going to have a flash crash here relatively soon, just like we had back in 2021 after Elon Musk went on SNL shilling Dogecoin. But yeah, enough of that. Let's go ahead and actually chart some Bitcoin here. We could probably notice there's a bit of a wedge forming, right? We got trend here on the bottom side, maybe the hourly time frame is better to look at this. We got a nice uptrend, some flat highs within here. We'll see if we do break out to the upside or downside. On a charting basis, it would make more sense to actually break down and sweep the lows, something like this, take out all of those late longers before resuming back to the upside. But we do see shorts are just continuing to pile on. A lot of shorts continue to pile on here. That's why Bitcoin just shot up one more time. So we'll see. Once again, pretty 50-50 on the charts. I'm not really too sure what direction it is going to be headed. That's why I would say it's really just a no trade zone during this parabola. I like to trade ranges, not big moves like this, because the trend is your friend and the trend is up. If we did a swing fail this low, that would actually be more of a trade I'd be looking to potentially take, but I don't know. I'm fine just holding spot right now. I'm not really worried about leverage. I'd rather try to short the top when I do think the top's coming in, but I'm not going to time the top on an uptrend. I'm going to wait for clear confirmation of a breakdown and all of those other indicators we were talking about that should signal we might be entering the bear market later on, maybe beginning of 2025. But yeah, real simply, this is the chart I'm looking at. Maybe I should put an actual horizontal line within here. We'll see what Bitcoin wants to do within this range on a fractal basis, like we were talking about yesterday, just comparing to last cycle. We really could see either one play out, right? Both of these would align pretty nicely with what Bitcoin does after it breaks all-time highs, but I actually don't think we'll go down too low if we do sweep the 85K level. I think 85 will hold. I don't think we'll even fill this CME gap down here at around $78,000. In my opinion, we're going to leave this behind to fill later on once we do enter that bear market. So I do think this will eventually get filled, 95% due, but not until the final high comes in for Bitcoin, which could be much later on. But let's go ahead and actually look at some of the order flow, some of our buyers and sellers in the order books, see where they're placing their bets at. First things first, that CME gap actually does make a lot of sense to come down to, right? We got big single prints down here, but above that, right, below this sweep level where these other single prints are laying, this is where I think we're going to end up because we got a lot of buyers down here. We talked about this, and I'd say a lot of buyers. It's really just one buyer that has staggered limits within here, over 2,000 Bitcoin, so they know what they're doing. I do think it makes sense for this to pull price into it, and that's where we're looking for a potential low to come in at around 84,900, sweeping all of that good liquidity from all of the late longers within this range. We also see buyers trying to scoop up price at around 87,500, another 5,000 Bitcoin order right there. But above us, we don't really have any sellers. No one is trying to take out shorts, at least big shorts in the market right now. Whales are just trying to stay away from that. I think we'll see more of that selling pressure come in once I'm trying to short, right? Once we see those recessionary indicators actually start to fully play out. As of now, I think people are not trying to fade this trend on Bitcoin because it is in a parabola. You can see we're holding the VWAP very, very nicely, and open interest continues to just go down here. There's not actually a ton of longs that are opening. The longs that were putting in positions right up here at the highs already got flushed out of the market. You can see they got taken out. So I don't see any need to actually go down lower. And that's just why I'm very 50-50 on the charts. I think if we do start to break down and change structure, yeah, you're probably looking to hunt that 84,900. But don't fade Bitcoin. Trend is your friend to the end of the trend. Now let's look at some other charts real quickly because it is Monday. So we got the Russell opening up green. So that's nice to see. We're around the value area high clusters. So we'll see if this is the back test, if we're going to roll one more time to hit that line and then go up for an all-time high. But I do think the Russell is going to start making moves here to the upside, and that could be another confluence as to why Bitcoin might not pull back, or why Bitcoin might just do a quick flush but then continue on up to six figures. So I like what I'm seeing on the Russell, starting to get into that supportive zone. The S&P just continues to kind of march on up here, still have a very nice uptrend on this thing. We do have a futures gap below us that we have tapped right up against but did not fill. A lot of times these don't fill, right? They just get tapped like so. So I wouldn't be surprised if that is where the low starts coming in for the S&P, or if we are going to sweep down. I mean, it's pretty 50-50, but I do expect this to hold at a minimum or at that daily EMA. A lot of confluence below us on S&P, a lot of strong support right below us. So that's good to see there. And the dollar is starting to pull back as well, so inversely correlated with Bitcoin. We'll continue to watch this and see what's happening over on the dollar, but I haven't been really too concerned about it because Bitcoin hasn't been respecting it as much lately since it is in a parabola. We also see gold had a pretty sharp pullback, and this is historically more or less inversely correlated with Bitcoin, so I don't mind this either. And we just see a lot of continued strength here over in the altcoin market, and not only is the altcoin market continuing to put in higher highs and look very, very bullish within this range, breaking out into price discovery for the year, but Bitcoin dominance is finally starting to roll over here. So this is something that could go along with what I'm saying. The top is sooner than most people expect, and this could be the start of where dominance starts to roll and altcoins start to fly. Does that mean that Bitcoin has to trade sideways? No, Bitcoin can still rally, but alts will just rally harder. So we'll see how this all does play out. But if you do have any questions about anything I talked about, or just want to join the community for this channel, link to my Discord is in the description down below. I also got a bunch of exchange links down there, so feel free to sign up to my exchange partners using those referral links and get yourself some bonuses, including a 10% cash back on any deposit up to $10,000 for futures trading on Bluefin. Don't miss out on that. But with that being said, thank you all so much for watching, and I'll see you all in the next video.